This is Aaron Levine, LG Insurance Agency, with another episode of the And Insurance Podcast. We might not even get to the insurance piece of it because we're back with Kevin Muldowney from David Muldowney Jr., CPA. It's year-end 2023, and if you haven't done your tax planning, you still have time, and we're going to get into that. And we have a couple other cool things to talk about just to get caught up with 2023, 2024, and where's the IRS right now? So what have you been up to the last year?
Not much. Doing a lot of planning.
Good talks, yeah.
Yeah. We moved locations.
Okay.
As you may be aware, as many people may be aware, we were in Colts Neck and Little Silver, and we combined under one roof in Shrewsbury. Right down the road, right on Shrewsbury Avenue, next to the Schwartz Mazda dealership.
Oh, may the Schwartz be with you.
Exactly. That's why we moved there, so we could say that.
But you don't drive a Mazda.
I don't.
So
I don't.
We're
maybe 2 doors down from the Circle Hyundai, which is what I do drive.
All right.
So it makes service a little bit more convenient.
All right. You can just drop your car off and then walk up to the office. But we're not here to do car advertisements.
Exactly.
So let's get rid of those. When it comes to your business right now, you said you've been doing a lot of planning. You've been doing tax planning. You've been doing more business-related work, CFO type stuff. Get into what you've been up to.
Yeah, so the business side of the business has grown, substantially. Doing outsourced small business accounting, as well as the tax planning portion of that, and also tax planning for individuals. It's never too late. Never too late to plan for 2023.
Right. So we're planning for 2023 as we're coming to the end of 2023, and then we've got to start talking about 2024. But it's been an interesting year with our interest rate environment, our inflationary environment, right? What can businesses then expect at the end of the year? What's changed over the last couple of years with respect to your methods and what business owners need to expect or not need to expect with respect to the taxes?
Sure. So 2017 was the Tax Cuts and Job Act. So that reduced income taxes, increased bonus depreciation up to 100% of qualified assets put into service.
Okay.
The 22 ended that, and then 2023, that bonus depreciation went from 100% down to 80%.
Well, that sucks.
2024, it drops again to 60%.
That sucks.
And then 20% going forward, unless the rules change, which now I know it's November. Things often don't change until sometimes January, February, or March.
Okay.
For 23. So that's one thing that
if all things were equal, income and revenue, one would expect to pay more taxes in 2023 than they did for 2022.
All things being equal, yes, right. Because you can't write off as much of your assets as you could in 2022.
So how do we find new things to write off?
So there still is this.
Are we allowed to talk about this in public, or is this
know.
Supposed to be one of those private conversations?
Could be a private conversation.
Okay, but let's make it public.
For more information, please see me. You know how at the end of all of your statements, they all say, "Please consult your tax advisor."
Right.
For how this affects you personally. I can't ever say that. Which stinks, but
because you are that
that
advisor.
So I can't always say.
But it's the same thing. It's consult your insurance agent about how you want to set up your insurance and what changes can be made, right? With respect to a lot of businesses and wealthier clients, we've been reducing umbrellas actually over the last period of time because prices have gone through the roof. Things have gotten absolutely haywire with respect to insurance premiums. So, we're trimming down that top layer in many cases to try to save money there because we can't remove the bottom layer. We don't want to reduce how broad coverage could be on the bottom layer for nice sized businesses and wealthier, but we're seeing trimming down coming off the top layer to save a couple of bucks.
Interesting.
But it's consult your insurance agent. I'm like, please don't remove your umbrella, but we can trim it back,
skim back a little bit.
Yeah. If you have 20, maybe we go to 10. If you have 10, maybe we go to 5. If you have 5, we can always talk about it.
Right.
and so on and so forth. But, I had a nice video go out recently about umbrella policies, personal umbrella policies, and the need to have a good umbrella policy. Having that first umbrella million be really good is better than having 10 million of something not so good.
True.
So back to consulting my tax.
Back to me.
Back to you. Sorry, that's what we're here for. Consulting my tax advisor about 2023 planning. So I'm going to pay more taxes come April. Good to know.
So as a caveat to that reduced bonus depreciation, the section 179 expensing provision is still in the code.
Okay.
Right.
What's that mean?
So you can still write off 100% of qualifying assets, up to $1,160,000. That starts to phase out once you get to $2,080,000.
Okay.
Then it starts to scale back as far as assets placed in service. But so there still is the possibility to write everything off. So you still may have, all things being equal, have the same tax bill. Let's hope all things aren't equal.
That's why you get paid to do what you do, because you just told me I can write off 20% less. But then you said, well, maybe if we do it another way, you can still write it off. And this goes back to, my favorite hashtag of all time ever, the who you work with matters, and why I love to hire professionals to do everything for me, right? Like, I want to make sure that we have great tax people in our corner, great attorneys, and everybody else, and even my team, they're professionals that I trust to do a ton of work for the agency, so that I can come out and hang out on camera and microphone and
do stuff like
and get free tax advice from guys like you. So there's some interesting things, and basically what Kevin just said is to consult your tax professional come tax time, or now, really, before they start getting busy into tax season, to really start figuring out that plan and strategy and get an idea of what it could look like come April, so you're not unpleasantly surprised, because I don't think April 18th is ever going to have a pleasant surprise.
Right. Right. And I do have to add that everybody's situation is unique. So what we're saying here, if it applies to you or not, is based on your personal situation. Other ways that you can, and I brought the IRS recently released the retirement plan contribution levels for 2024.
Okay.
And there is a slight increase in the 401k contributions, IRA contributions, 457s, 403bs, stuff like that.
So you can save more money.
So you can save more money in pre-tax retirement accounts.
Now, if I have a 401k and I want to invest that money into like a CD account, can I do that?
Depends on who you have the money with. But yes, most places. It depends on what the brokerage does for you. Yeah.
Okay.
Yeah.
I don't have a 401k, but I'm just like thinking right now, based on our interest rate environment and the stock market volatility, that CDs and high yield savings have been a great vehicle for the last 10 months.
Right.
If not almost over a year at this point. And who knows where things are going to go over the next year.
I'm sure some of the brokerage houses can find, funds that have high yield CDs or high yield savings, or, if you can claim to be risk averse and want to put everything in cash and put it in one of those high yields.
Put it in. I love the high. I'm a big fan of it. I mean, it's it helps me sleep at night, not worrying or knowing that there's almost a guarantee, with that 5.5% or whatever it is.
And if you have the cash and it's sitting in a just a checking account, you might as well make it work for you.
Yeah. I mean, we moved a lot of our. We opened up some money markets to just transfer funds to get some money into interest savings vehicles, even though we need it for cash flow purposes. But moving money back and forth has been beneficial. With those 4%, 5% accounts, why not?
Right.
When it's at 0.1%.
Right. And you're checking or nothing.
Cash is better.
Or nothing. If it's sitting in a checking account, it's not making you anything.
It's not making anything. Yeah. So it makes sense to move it back and forth and clean it up. But anyway, before we started rolling, we were talking about a couple of different things. Now, in 2022, and I've got the note here, there was a lot of news fluff that came out about 90,000 new IRS agents that were also going to be carrying guns that were being hired. Where are they now?
Well, they're definitely not answering the phones at the IRS. I'll tell you that much. Yes. So the package was passed where they allowed more money for the IRS. Some of that was supposed to be used for additional IRS agents. I believe they said 80,000. I don't know if the math works out right to be, an average day's salary for 80,000 IRS agents based on the amount that they put towards new agents.
Did you actually do the math? You definitely did. You definitely did.
I didn't.
You definitely have a spreadsheet.
I didn't.
No?
No.
I don't think you're telling
because the numbers were so fluid that I didn't know how much they put towards those 80,000 agents. I know that they were hiring. My LinkedIn feed was full of.
How many job offers did you get?
Job offers for the IRS.
Right.
So
all those recruiters
I know that they're looking,
trying to recruit you.
I know that they're looking, but I don't know if they found
Kevin,
all
based
80,000.
on your qualifications, we feel that you'll be a great fit for this position. I love that.
I know. It's great.
I get so many LinkedIn messages from all sorts of strange insurance-related opportunities. And I'm like, and sometimes I'll respond, just like a telemarketer calls you and you play games with them. I'm like, sure. My starting base salary is $200,000. I'll work a 3-day work week, and I need 6 weeks of vacation. Can you let me know if this will be acceptable? I'll come in for an interview. They don't know how to respond. They don't know how to respond. We'll get back to you.
All right.
Okay.
Have they gotten back to you?
They haven't gone back to me.
No, it's too bad.
But if they looked at my qualifications, maybe they would. Who knows?
Yeah.
Just random bots sending out random emails on LinkedIn is, there's so much spam out there. It's quite ridiculous. But anyway, back to these IRS agents, right? So we were scared that all these IRS agents were going to hit the street and we were all going to get audited and we were all going to be penalized and thrown in jail and all this stuff. And, we haven't seen them and they're not answering the phones. Are you seeing clients of yours getting audited? Are you seeing more of that popping up, or pretty much status quo with respect to audits for law-abiding citizens and business owners?
Right. It's pretty much status quo. Even before, the funding was put towards the IRS and the 80,000 new agents were going to come out. A lot of the stuff that they do is correspondence.
Okay.
So it's considered a correspondence audit. They'll find a discrepancy between what they have on file and what your return shows, and then they'll send you a letter kind of displaying those differences. And then you either, agree with and send in the additional tax, or you disagree with it, send in your reasons why.
Right.
And that's where that's where we've been helping clients.
So I've gotten a few of those over the years, but it's usually like $300, $400 that of more tax that I owe on these little things. It's not worth my time to try to figure it out.
Right.
If it ever came in and said there was a discrepancy and you owe us, $25,000, then maybe I would look into it. But, these little couple $100 difference owed in tax from whatever they're saying, it's not even worth me looking into. I just want to pay the bill and get them off my back.
Life. Exactly.
And not
exactly.
Even, right.
And something like that, it could be the calculation of interest, right? Mm-hmm. So if you owed $50,000 with the filing of your return, right, that interest was calculated to a certain day.
Right.
But if you sat on e-filing it, or you didn't get it, the payment out in the mail in time or something like that, and they received it a few days later, then that could be why the amounts are so small. And it's, in most cases, one, they're right. Number two, just it's worth it to pay it.
Are they right?
In a situation like that, yes.
Okay.
Many times they're not.
Okay. In those situations, they're right. So we'll just pay it and we'll move on with our lives.
Right.
Now, sticking with the IRS, right? Because when it comes to, we went through a whole period, we had all these PPP loans, and then there was these employee retention credits, which businesses were getting as well for staying open for paying their employees during the harder times of the pandemic.
Yes.
There was recently, I guess, early 2023, a huge round of ERC being reopened or staying opened, and there was all these pop-up businesses out there helping business owners get more credits, right? Get more money back because they didn't properly get their ERC, and then the ERC was shut down pretty abruptly, or it ran out of funding. What are you seeing going on with people that took advantage of the ERC and the PPP loans? Like I've read I get all the news stories for people getting caught for buying Lamborghinis with PPP money,
right,
or that set up fake companies and thought they weren't going to get caught, to say, oh, I'm going to start a new LLC and I have 20 employees today and here's my revenue and you owe me $150,000, right? And those people thought they would never get caught,
right,
which is awesome. So I see them getting caught all the time, and it's kind of fun to giggle at it because they bought a Lamborghini with cash,
right?
And they didn't think anybody was going to look at that. No big deal. Like,
right.
It's worse than the drug dealers. At least the drug dealers get away with it and they know how to launder their money properly, So with the ERC, you were mentioning something that, there's the IRS is starting to really look into businesses that have collected on that.
Yeah. So they have put a temporary stop on
right.
the ERTC program. And now I saw the link to an article. I didn't actually read the whole thing, but it's saying that they're allowing employers to pull back on if they were misguided, if you will, from one of these pop-up consulting firms that helped you out and then went away and, weren't going to be there for the audit,
right?
If you were to ever get looked into. If they were misguided by those companies, then they have the ability now to, pull back or pay back, I guess you could say, their ERTC money without incurring any penalties. Are they getting the money
back from the company that helped them, who took probably 50% of
probably
the benefit?
a large percentage, I would say, yes.
They're not going to get that money back.
No, they're not.
Those companies are gone,
yes.
Right? Because I was approached at one point, probably middle of last year, Aaron, there's so much money in this ERC thing. We've got to get all your clients on board and get people in. We're going to save everybody so much money, and then you're going to make X, Y, and Z. And I just never bought into it.
Mm-hmm. Right.
One of those things that sounds too good to be true.
Right.
It probably is. And now I'm like glad that I never got involved in it, because I'm still attached to all of my clients on a regular basis.
Mm-hmm.
If I go and screw them over on one side of the table, it's going to affect me on,
right.
for my normal business. So,
right.
Trying to grab a couple of bucks is not always worth it, right? To get that extra quick hit.
Right. And I don't think it's any coincidence that on July 28th, there was a news article that broke that some guy was filing these ERTC applications for his clients and got $238 million or something like that.
Oh my God.
And then on July 31st, the IRS came out with updated FAQs
related
to the qualifying for the ERTC.
Okay.
And one of the biggest things is actually, I tell all my clients it, so it's ingrained up here. It's question 4 as to whether you apply, and says if you are able to work remotely, you don't apply.
Oh.
You don't qualify.
You don't qualify.
So.
Interesting.
Yep. And it had to be a government ordered shutdown.
Right.
It couldn't just be, a lot of people aren't coming in, so I'm just going to close my doors or reduce my hours.
Right.
So it's not everybody. I receive a lot of voicemails on my cell phone too about, are you taking advantage of the $26,000 per employee that you're entitled to?
What's his name? Kevin O'Leary, Mr. Wonderful. He was advertising on TV for the ERTC credits. He had a company that he invested in, or, he helped start to go after this,
Yeah.
But he was all over, like he was on TV, like pushing this opportunity for business owners to get their money, to get those credits back. So
yeah,
it's interesting to
right. I mean,
see.
if you qualify, if you correctly
Mm-hmm.
and legitimately qualify, it is great. It is great, quote unquote, free money. But if you don't, you really have to look at those. If you don't think you do, or you think there's a gray area where you may not, I would suggest checking out those FAQs and
just if
and
at this
seeing
point enough is enough. Just
Yeah.
why are you worried about your revenue from 2022 at this point? We're moving into 2024. Let's look forward instead of trying to find some money from 2 years ago.
Sure.
And that's my unhumble opinion. So one of the things that I know you specialize in is you specialize in associations and audits for associations, homeowners associations, condominium associations. We've been getting so many calls into the office lately for associations shopping for new insurance policies, which is great. What we're finding is a lot of these associations are not well funded. We're finding that a lot of these associations are well underinsured, and the board is stuck between a rock and a hard place of getting the association put into a proper place, but at the same time, they don't want to spend the extra money.
Right.
You know, so I know you audit and you work with a lot of associations. What are you seeing on your end with respect to association financials? Or you don't like get into the nitty gritty of it? You just look at the numbers and say, yes, your bank recs check, and here's your letter of good standing.
More or less. That's where we don't necessarily advise on them, because then you're crossing lines between independents and stuff like that. But I could definitely see, you know, practically speaking, I could definitely see that the board is stuck between a rock and a hard place, because they want to do everything they can to keep their owners' maintenance fees low. Right. You know, that's a selling feature for the association, for the community. But at the same time, you gotta make sure all your expenses are covered and you're appropriately covered, and there's no gaps in your insurance coverage and stuff like that. So it's a balancing act. It's a huge balancing act.
It's interesting because we just wrote an association in North Jersey, a smaller association, under 10 units.
Okay.
And as we're doing the review, and we rewrote the building policies for them, and then I asked them for a copy of their directors and officers and their crime policy, which would all be required by the bylaws. And they're like, oh, we don't have one. I'm like, what do you mean you don't have one? I'm like, and then at the same time, we quoted it out for them, and then they're like, yeah, we'll get back to you. You know, so then they're running naked without the officers being covered properly for something happening with a third party, and then, you know, the officers being liable, which we've learned so much about, that the boards are liable for a lot more than they think they are, and then they go without purchasing proper D&O coverage or a high limit D&O policy to protect themselves. I'm like, number one, protect yourself always, especially if you're a volunteer on a board.
Yeah,
make sure the board pays for insurance for you, right? Because you're not covered under your homeowners. You know, for anything business related or association related, you're not protected by anything you buy personally for any of that stuff. And I think that's a huge misnomer out there when it comes to nonprofits, and even businesses. Like if a business gets sued and the owners are named personally, you know, there could be a gap in coverage if there's not an officer's policy put in place. You know, so we look at a lot of these things with associations and different businesses, and there are so many gaps when it comes to insurance coverage that, you know, it makes me cringe.
Right. And
it's like, I have to cover my own ass here and make sure that I have it documented that you said, no, you don't want to buy this. When something comes up, I can say, yeah, remember this conversation? You know, we've got it. We've got it here for you to figure out.
Now you've been asking me all the questions, so now I got one for you based on what you just said. So in that situation, let's say you were asked to be on the board because of your expertise based on your job, based on your role in your job. Would your business insurance cover you then?
No.
Or no? Because you're serving as an individual, not as
a volunteer.
The business.
You're a volunteer at that point. Unless, even if you're a paid board member, right? If it's a board with compensation on it for a publicly traded company, you're still, you know, that board has to protect you. Now, in some high net worth, like ultra high net worth situations, we can put private D&O coverage in place for an individual, get them personal private coverage for a lot of money if somebody's worth significant money and you know, there's not a big enough insurance policy in place at the nonprofit level or the board level. There's sometimes a private policy that we can do, but it's not cheap. You know, to protect themselves, especially high profile people are more at risk when they sit on boards for outside influence and, you know, people wanting attention and filing lawsuits because of it. Becomes a huge pain in the butt. All right. So back to taxes. you love it. You're like, can we talk about something else besides taxes? Like,
Right.
can we talk about my workout this morning? What did you do? What did you lift at the gym today? What was?
I took a class.
Oh,
actually, yeah,
all right.
yeah. So I belong to the Fort Athletic Club.
Okay.
Over on the campus of Fort Monmouth.
Yeah.
And they have this class called it's for short EYS.
Okay.
Stands for Earn Your Stripes. There's four different stations with 2 to 4 exercises each.
Okay.
You stay in each station for 8 minutes.
Oh.
And then get a 90-second break in between to switch stations. And it's it's
high
a
energy,
HIIT program.
It's fast paced.
Yeah. High intensity interval training. It's the biggest rage now.
It's all the rage. The
Yes.
HIIT classes are awesome. All right, that was your 90-second break from talking about taxes. So
we're back to that, huh?
Moving forward into 2024, right?
Yes.
So not so much what can we expect. We're at the end of 23. We're going to have to get our 23 taxes done in the next couple of months. What should people really do to focus on not being in this position at the last minute? Working towards year-end 24, like, what advice would you give to somebody? What advice do you give to your business owners, year-end 2023 going into 2024 about getting themselves in a better position? Is it record keeping? Is it savings? Is it, buy more shit to get more tax write-offs? What's kind of...
It's a little bit of all of those three things that you
Okay.
just mentioned. The record keeping is key, right? You don't want to provide your accountant with 12 months of bank statements, 12 months of credit card statements,
Right.
come January, February, when they're
shoebox.
busiest most, right? So you want to keep your records as you go along, right? All throughout
Okay.
the year, for two reasons, not just for taxes, right? Obviously, it makes it easier come tax time,
Sure.
but also for business planning, right? You don't want to wake up on April 15th and be like, how can I owe $20,000? I didn't make any money.
Right.
Well, you did. Or there's things on that you think were deductible really weren't.
Right.
So you want to really focus on your business throughout the course of the year, not just come tax time.
Okay.
Taxes should kind of be the last of your concerns. Granted, up there, but not,
Right.
you don't make decisions just to save on taxes.
Yes, you do. Yes, we do.
So if you spend, let's say you're in even if you're in the highest tax bracket, right? Let's say you're in the 37% tax bracket.
Right.
If you spend $1,000, you're only saving $370,
Okay.
right? So it's not like you're saving that $1,000 by spending $1,000.
Okay.
You're saving $370 spending $1,000.
Okay.
Now, if you need that $1,000 product or supply or
Mm-hmm.
service or whatever, then yes, by all means do it. If it's going to add to your bottom line. But it's a saying that we like to use, and it's don't let the tax tail wag the dog.
Okay. So now, if a business owner uses their credit card often
Yes.
for business-related purchases, and now we're getting all these processing fees are everywhere. People are charging anywhere from 2.5% to 4%. Even Horizon Blue Cross, Blue Shield just started charging 2.75% to use a credit card to pay medical insurance. Now, when somebody's earning hundreds of thousands of miles or cash back,
Yes.
and those benefits go to the person personally, how's that looked at from a tax perspective?
So if it's a personal card and they're used for personal expenses,
It's a business card
it's a business card
used for business expenses. But
expenses.
the rewards go back to the individual that holds the card.
It would go back to the business. So if that person is a sole member or sole owner, then it's still business related. So they're not taxable per se as revenue,
Right.
but they do reduce your expenses.
Mm-hmm.
So in essence, those miles or those cash back is taxable per se, not as a top line additional.
How many clients have ever told you how many miles that they have so you can put it on their tax return?
If they get the cash, you can see that based on the credit card statement. You can't see how it changes into
So
United
miles are better than cash back because nobody's reporting miles on their tax return.
I mean, it may reduce your your airfare expenses on your P&L, but
Okay. All right. That's a very important question because I know that's a popular conversation to have. I've heard.
Right. A friend of mine
once said.
A friend of mine asked me, "Oh, you're going to be on with the tax guy tomorrow? Just ask him. Ask him about miles."
Exactly. Why not? All right. What else do you want to share before we wrap this up, Mr. Muldowney? What benefits are there to work with you and your firm? And, what's the last piece of advice you want to give somebody?
I would say just focus on your business throughout the year. Make sure you're monitoring everything on a monthly basis. See where there's areas to improve. See where there's expenses that can be reduced. While expenses are tax deductions, you still don't want to be overpaying for stuff that you can get better elsewhere.
Got it.
So, one of the first things we look at is insurance premium. So, that's why we've kind of worked well together.
It's a big expense, but that's 100%. You can write off your insurance premium 100%.
Yes. All
right. So I have one more question. So, would you ever tell any of your clients if they are using 1099 persons to do work on their behalf that they don't need workers' compensation insurance?
I would refer them to you to tell them.
So we had a guy just cancel his workers' compensation insurance. He said, my accountant said I don't need workers' compensation insurance because I 1099 my employees, right?
You know how I feel about those?
If they're an employee,
they're not a 1099.
They're not a 1099, right? Huge problem. And my response was, understood. If one of your subcontractors gets hurt and they don't have workers' compensation, I hope your accountant is going to pay all their medical expenses. Good day, sir.
Right.
I love, who you work with matters, and having the right professionals in your corner, super important. Don't give advice that you're not covered by your own errors and omissions insurance to give. I only play a lawyer and an accountant on TV and podcasts,
Yes.
But never in real life. Always refer them out. Kevin Muldowney, thanks for joining me today.
Thank you for having me.
Great advice.
Appreciate it.
Always appreciate it. I'll see you soon.
All right. Take care.